Welcome to the Market Alert for Tuesday, the 30th of August 2017. So yesterday, starting off with the pound, the market still remaining sideways. As you can see there, we had three signals, and unfortunately, the one signal that we had was a losing trade of 31 points as the market came back, as you'll see there, and eventually stopped it out. So the pound trade losing there, and that's because if we look at the bigger picture, you can see the market's not really going anywhere. It has these moves as we've seen before, where you get these little blocks. The market drops out for one day. Let me just get rid of that one, and then a few weeks later, or a few days later I should say, you get the same thing again. Market drops out, and then we've got another couple of days there. This time the market's broken out to the upside, but now we're back into this sort of sideways move again. No major trends in this market at the moment. Hasn't been for the last 6 weeks, because school holidays, the UK Parliament being in recess as well, so that's why you're seeing what you're seeing there. Let's see if there's any news to get the pound moving. There's nothing from the UK this morning. And then, or is there? Hang on a second. Yes, we have. We got that was some overnight news actually. ADP, no, net lending to individuals is the one I was after. Yeah, so we've got a medium impact news item there for the UK. Let's just go back a bit. Yeah, so the other news is European. That's out at 7:38 a.m. Net lending for the UK, and then we're off to the US for the ADP prelim, GDP, FOMC, Powell speaking later today, and then crude oil inventories again, of course, because it's Wednesday. They're out at 3:30 p.m. Meanwhile, in the Dow yesterday, let's start off with the daily chart, because if you go back to yesterday's market alert, 46 seconds in, I was talking about this area here. There was a gap in the market, and then the Dow managed to fill it, and it kept moving higher for the session, which is why when I sent the note out, if you'd been in the first three trades, then expect the market to go sideways, which it then sat in this area here. In the evening session, it had moved up just slightly higher, and then it broke out again, as you'll see there, to complete the day with another winning trade. But as I said in the message, 2 or 3 winning trades in the first hour in the same direction is a real bonus, and the market there doing precisely that. So the Dow, again, just going back to the daily chart, moving back to the upside. We've certainly got some resistance at this level here, which is going to be the 21,908 level the market needs to take out, and then above that we've got the 76%. Just as the market came back to the 76% area, which also saw this low here as well, you can see the market found support, but the 76% areas where the support came in, and then the market moving back to the upside. And as I keep saying, and as you know, they want the market to the upside, so they're going to do whatever they can to get this market back up to those all-time highs that we have here at 22,178. You'll notice nothing can stop this market, not even the Koreans launching ballistic missiles over Japan, and the dreadful mess that they've got in Texas as well. There just seems to be money move the market to the upside and keep making the money. It doesn't matter what else happens in the world, or use it as an excuse to bring the market back, shake out people and then bring it back. But as long as the bankers are making money, then it doesn't matter about anything else that's going on in the globe. But then again, that hasn't been any different in the times past, but just now it's more blatant, as we've seen for the last 9 years. Right, let's have a quick look at the implied volatility. So the implied volatility is moving higher. I just need to put in yesterday's. Let me just do that. Let's add the data label. 932 up from 894 to 932. Now, if you're wondering why the implied volatility has gone up along with the underlying market, the answer is quite simple. Normally they're opposite each other, inversely related, and the reason for this is quite simple. The market hadn't accounted, as I said in yesterday's market alerts, for Friday's volatility, because obviously the launching of the missiles by North Korea over Japan took place in the early hours of Sunday morning. So the implied volatility was really playing catch up, and that's why it's up from 894 to 932, because of that potential risk in the background, even though the underlying market moved to the upside. Also indicates and confirms the manipulation that I was just talking about as well. If you wanted to look at it that way, they've moved the market higher to try and suck people back into the upside as well, because they're going to drop this, there's no doubts about that, within the next couple of months. And therefore, if you can get more weak holders in at the top of the market, the better off you are, because you can offload to the sheep, as it were. Right, that will do it for this one. If there's anything to report, I will let you know. Other than that, as ever, thanks for watching. See you in the next one.